So, welcome to this short video where we're discussing on how to invest in a changing environment. When I mean a changing environment, we have seen what is happening globally, that the geopolitical tensions and the rising inflation has changed the trading environment and economic environment as we speak. But the major problem here is that the stagflation or rising inflation that we are seeing around the globe is also mitigating on what on investment. Not only investment, on also the living standard of people. But you as an investor or a trader, how can you take advantage of what of this trend in the world or also down here in Nigeria economy? We can see that we're already entering a stagflation, seeing our inflation leading about 19.64 as at the last data from Bureau of Statistics. That's for the month of July. And also, we're looking forward to see the month of August consumer price index. At the same time, they will expect to see the outcome of also the MPC meeting likely to hold toward the end of this month of September. And in that, we need to prepare on how to take advantage of what of the last quarter of the year, knowing that last quarter of the year come with a lot of what seasonality. And to speak now, the month of September has its own seasonality, which you know that they're a mature economy. As they are going for summer, most of them also be selling to go to summer, and also when they come back, they'll be buying in October. But here in Nigeria, like I said in one of the classes before, that the same trading pattern of or market structure of or patterns, or let me put it, or price pattern or price structure of the market for the month of September is almost the same to that of August. As to speak now, don't forget that in Nigeria here, no, September is the month of resumption of new session, and many parents, will also be selling their position to pay school fees. Then when I say school fees, I mean those now that we have seen a lot of Nigerians are sending their children abroad to work to school, and not only that, knowing the exchange rate what it is now, because they are not having access for that, most of them will be selling their property, their portfolio to what to pay for these fees, and that will put pressure in the market. And we have seen that after seeing impressive earnings for half year, we have not seen the big boys or the smart money playing much in the market. Yes, we are seeing improvement in the money flow in recent days in the market, but that has not given us a signal that the institutional investors are back to the market. Yes, they might also be doing their own analysis, looking at what is happening, knowing that this also is a pre-election year for Nigeria. And this is why we are also in the current master class, we are coming with what we call the actionable and new actionable and technical structure, technical strategy to trade effectively to preserve what to preserve capital and grow that capital. Because the market now calls for what for caution. I will tell you that nearly all the investment windows are being hit by high interest rate and rising inflation. But for you to edge against this inflation that is around the corner already, that world is experiencing, you need to be in some investment window that can appreciate to give you above what inflation. If not, at the end of the day, your portfolio will be value of your portfolio will be down because of what your return is still in red. Why? Because it is below what the real inflation. And to say inflation in Nigeria is about 19.2, I will tell you the real inflation is more than that. And this is how to invest. Yes, also if by now because of the market situation you're also in loss position, that these are opportunities we're going to share in that masterclass how you can take advantage of what the last seasonality we're expecting for in the last quarter of the year. You know that every year all over the world, that quarter is the most active quarter. It's going to take advantage on how to invest in it. If you look at all the investment that are available as we speak now, look at the stock market, look at the bond market, look at those that are playing even the crypto space. Also look at those that are doing FS. You can see this interest rate up and down is driving volatility all over across the world, across all investment windows. That means it's for you to know where can you hedge against inflation. As we speak now, these investments have different level of risk that associated with them. And also they have also different deep. When I mean deep, how deep they are that they can accommodate kind of fund that will go there. Back here in Nigeria, we can see that our market, equity market, is not as deep as our bond market. But really, we are going for preservation of capital and also grow that capital. You need to play defensive in this era, in this season. when I play defensive with a defensive stock and also some technical stocks that also help you to preserve your capital. That means in this regard, you as a trader or investor, you need to understand what you are doing in the market so that you flow with the market to make profit. In this note, I want to look at how not to lose money, in this market on that in that class. Not only that, which of the investment windows are really where you can put your money. As we speak now, our market, here in our own capital market here, where we have the financial market for short term, or the equity market, the capital market for what for long term. If you look at the bond market as we speak, yes, you can see that the bond market is deep, and that is where most of the investor play. Because but as we speak now, as inflation continues to rally, we expect that the risk of inflation and also rising interest rate for government bond is also being will be a kind of a setback for that market. And also knowing that no matter what you put in that, yes, no return in that bond market is above 15%. And I speak now, inflation is already around 20%. That means you as a retail investor, you as a high net worth investor, will be thinking, where can I preserve my capital? Even when market rebound again, or when the economy turn around, sorry, or even market rebound again, you are also, your cash is intact. Not that you're losing money because if you have your cash, your possible have lost money, now what you can buy now, even the next 6 months, they can't afford it because of what continual rise of what of price of goods and services. That is what stagnation is doing. You see continual rise of what. But there are some companies and equities that you can also invest, or sector that you can also play for you to be in a defensive stock on a sector that move with what is happening in the economy or in the world. That will help you to preserve your capital. And that for now, if you're looking at which for me, if you look at what is happening in the market, that market is very, very volatile, and many elites in Nigeria that are invested in that market, they are nursing their wounds secretly, not coming to let you know that they are losing money, because that market is so volatile that they are losing money nearly every day, up and down. But because you can't edge in that kind of environment, because you can't edge in that environment, it will become difficult for you to invest profitably in that environment, because it's very, very volatile to speak. And very volatile also quick it can also lead to what to quick unexpected losses, and also highly speculative. As there is also no base for what for evaluation, it is true value. That means for you to be there, you have to be very careful. Then also scam also is very possible in that market. For that, you have to play very careful. Then the bond market I mentioned earlier, can see that the inflation and interest rate today has made make that market, yes, unattractive, yes, but those because of the deepness or the what can be soaked in that because of different bonds. Yes, we are seeing trillions entering there, but I'll tell you the equity space still has some measure. Yes, there's still high risk in equity space, but I think there's high return also in equity space, because what you can only play there. Our ETF here down in our market here is not active as other ETF in the other matured market, which is also option derivative. We are not doing the much share in Nigeria, but our market is mainly bond, paper, money market, treasury, and all those stuff. But because of high inflation, those are not what attractive for investors now, because really you are having a negative return. For that, you want to look at where you can make some hedge, and the only place you can hedge against against inflation is the equity space. I will tell you that if you look at the figures that have come to the market as in terms of earnings, tell you that yes, between now and end of the first half of 2023, we might see these companies sustaining this kind of tempo in terms of performance, unless something changes. Also, don't forget that as we are looking for general election coming in February, whoever that emerge as president, we expect to see a quick reform to put Nigeria in the right direction. That reform will also bring kind of a rebound, a jump in equity investment in the economy. And that tells you that you as an investor, as you are preserving your capital now ahead of that, you have to be, even though you are not making much capitalization, where you can also preserve your capital to trade at that time. Not that when you want to buy stock, because the stock have gone high, and you are coming out from the physical market, what you are getting will not give you more, because inflation have kind of rubbish your portfolio. But for those that are into big fund like the PFAs, they can do that because they are trading in a big fund. But for you that are net investor, for I that are retail investor, who can also take advantage of equity market as to speak now, because I see space in that market. Now I've said that yes, for this time, because of the price fluctuation in more in equity market up and down, for me, investors should also invest with knowledge. With that knowledge, you can make a reasonable return and protect your capital. And that is the essence of what the common masterclass, so that you can take advantage of stock that want to share. Because at this period of stagflation, what you need to do for what we call commodity back equities. You can look at those real estate back equity and also infrastructure back equity. You know that things are happening that this will support what the price of the cost. When there is high demand for a product, even when it's increased in price, that company is expected to what to provide, or at the end of the day, a better number that will support price and what and pay out. And when there's a strong payout, I will tell you that this also will lead will lead prices up, or will lift prices up because of what? Because of impressive earnings. Also, don't forget that different sectors are, we have some sectors that are defensive in nature, some sectors that are cyclical. I always say that, and you need to know which sector that you should be for defensive and which sector you should not be, and how you should invest. Who are leaders in that sector, so that you can position ahead. And also, like I said, that technical patterns have failed many investors in the market at this time because of what? The volatility, because of change in the environment. And that means the same pattern you are seeing, you see, like a head and shoulder, the way you trade it before is not the way you trade it now. Because of what? You need to understand what the price structure of every candlestick you are reading, every price action you are reading. You need to understand what are the volume behind it. How can you catch these changes so that you can make a point of decision? This is what we'll be sharing in the coming masterclass. And I believe that at the end of the day, you as investor will see value for your work, for your money, because you really want to know how to invest wisely. Because that is your hard-earned money and you want to preserve it. And the way you can get that this is go into stock that has what, that has that has access, that the price of that stock is likely to go up, either because of the company is doing well or the sector, the positive sentiment. These are where you should also be looking at, because I believe that that is where you should look at. Investing in stock line, I think there is at this time, no or little fear in trading, depending on what, on your broker, and also how you also have access to the market. Also, when you are trading stock, you take almost full control of your work, of your investment, of your trading, because you are the one taking it. And also, you can buy stock at any time and sell at any time, looking at information that is available in the market. That's why it is different from other investment window. And that's why I want to take advantage of what, of stock market, equity market, to take yes, in that class we'll be looking at also how to to take advantage of arbitrage trading and other windows that can help you to hedge against inflation. What is happening in terms of dual listing in some company, and also companies that have a dual source of income. Those dual source of income also going to help you to impact at the bottom line of this company. You need also this what we want to explain in that meeting. At the end of the day, you get your stock. You have others that are going to share their own knowledge at the meeting, so that you can invest wisely in this last quarter of the year. I want to take advantage of it, and that's why we are hosting the masterclass on the 1st of October. That is the Independent Day, and it's a Zoom meeting that every participant will share value and time, value for their money and also for their time. We look forward to see you at that training, and I believe that at the end of the day, you also, your portfolio will be in for it, because you need to also boost your work, the bottom line. Those cyclical stock, those defensive stock also will discuss. Those sectors and industries where you make money, all this will be shared at this training. We look forward to see you in the training, because we believe that you can take advantage of taking advantage of especially that equity prices and stocks, and the corporate action of this company, their balance sheet, you take that, because most of the listed company balance sheets remain robust, and this will support what their price at the end of the day. That's why I said, look at what is going to happen in the last quarter of the year. Take advantage of it, that at the end of the day, you as a trader or investor will also be smiling to be back. Yes, we look forward to see you. I say thank you and enjoy the rest of your trading day.